with a high-quality company in a sector that's having real difficulties? That's the question with Popeyes Louisiana Kitchen, PLKI, the restaurant chain formerly known as AFC Enterprises, before its app name change at the beginning of this year. Here's an incredibly well-run restaurant chain, 2,262 locations, 47 states, 28 foreign countries. 98% of the restaurants are franchised. That's the model we like. Popeyes gets to pass any food cost inflation along to its franchisees. Company has a terrific CEO in Cheryl Bachelder, one of my Bankable 21 chief executives from Get Rich Carefully, and she has executed a terrific turnaround here, remodeling the stores into a more attractive format in order to boost traffic. We just saw the new format when we spoke to Bachelder in person at one of her stores in Brooklyn. And Popeyes is giving me some serious long-term gains. It's up more than 350% over the last 5 years. Lately, though, things have gotten difficult for the whole restaurant space. Maybe it's too many players. Maybe it's too much competition, not enough consolidation. Even after the news last night that Burger King might be acquiring Tim Hortons. That's a big reason why Popeyes, I think, has been punished over the last couple of months. Stock's down $5 from its late June highs. Now, Popeyes reported last Wednesday after the close, and even though the company reported solid results, inline earnings, higher than anticipated sales, better than expected domestic same-store sales growth, up 3.8%, management reiterating their full-year guidance, the stock got hit, falling 3.6% the next day. Some of that's because there were fewer than expected franchise openings, 13 new stores openings being pushed back to the second half. But I think a lot of the pullback has to do with general skepticism surrounding the entire restaurant group. Same skepticism that clobbered Buffalo Wild Wings when it reported a stellar quarter. So should we be buying Popeyes in this dip? Let's take a closer look with Cheryl Bachelder, the CEO of Popeyes Louisiana Kitchen. Hear more about the quarter and where our company is headed. Cheryl, welcome back to the show.
Thank you, Jim.
All right, Cheryl, we had a dramatic game changer this morning. We had Tim Hortons and Burger King getting together. Now, some people are saying that's out of taxes. My sources say that's not. It's about trying to get more growth. When Popeyes hear that, when you hear about this, do you say, you know what? My stock needs to go higher. I've got to consider something that would be transformative and really get the stock moving like Hortons and Burger King?
You know, Jim, we feel like we are doing exactly what we need to do to get our stock moving, and that's building out the footprint of Popeyes in the U.S. and around the world. I've said many times this chain has an opportunity to double in size in the U.S. and then fully exploit the new footprint around the globe. Plenty of growth runway in this company and therefore in this stock.
Well, if that's the case, I mean, you delivered what we typically want from a company, better than expected, same store, better than expected earnings, and yet the stock went down. Is that just saying that there's a malaise in the industry? Because honestly, when I saw the number, I thought the stock would be higher.
Well, I thought you'd say buying opportunity, Jim. That's what it is. You know, our plan hasn't changed. Our performance hasn't changed. We're a very consistent, reliable growth company. And I think over time, we're getting credit for that. The stock was $13 in 2007. It's $40 today. We're making great strides, and I think the market's going to recognize those over time.
Okay, I want to understand a little bit better the June decision to pay Diversified Foods and Seasonings $43 million for your recipes. Now, I know that was a company that was founded by your founder. Why did you have to pay that much, and what do you get for all that money?
You know, Jim, that's a really good question. A lot of people didn't know that we didn't own those recipes, but the founder retained them when he sold off the company in the mid-90s. We wanted that incredible asset of our recipe back with the brand where it belongs. We were paying a $3 million royalty for it every year, so we bought out the formula rights forever in perpetuity, and that has tremendous value to the brand for the long term. Control over our recipes, they're aligned with our brand forever, and there's no risk in the future of any issues there. So we believed it was a really good investment, plus we're reinvesting that $3 million in royalties that was a non-working dollar for us into hard-working plans to grow Popeyes.
Now, why don't, would that have been money that you might have been using to be able to also to buy back more stock? Because while the stock is illiquid, it clearly matters when you take stock out because it does move, you're one of those situations, when you buy stock, it does move the stock higher.
Well, that's right. And this year we forecast that we'll buy $20 to $30 million worth of our stock back. We've been very consistent with that over time. Our first use of cash is to invest in organic growth for the business. We're also building 10 to 15 new company restaurants this year, which produces great EBITDA for the company and for the shareholder. So yes, stock buybacks are something we're committed to and have done consistently over time.
Okay, I know you've got another new offering. You've got a $5 bona fide big box. Are you worried at all? I mean, you got to keep coming up with new things. Now, you've been remarkable in coming up with new things. But will it eventually be a treadmill where you'll have to say, oh, Man, last year we had this great thing. How are we going to outdo it? Is it going to get too hard at a certain point?
Oh, no. Food is what we specialize in, Jim. You know how good our food is, and our culinary team is one of the best in the industry at coming up with new ideas. We actually generate 80 new ideas every single quarter just to get one all the way tested and ready for you in the marketplace. So we're prolific, and we plan to stay that way. We just had Terran tenderloins in the restaurant with creamy garlic sauce. No one has anything like it. And now, as you said, the $5 box, which is a wonderful, good value meal for our core customer.
Well, look, I am saying it's a buying opportunity because when a company does better than it's supposed to and the stock goes down, that's when you should buy it. That's exactly what I think people should do here. Cheryl Bachelder, CEO of Popeyes Louisiana Kitchen, thank you so much for being on the show. Guys, you don't get a discount that often in a quality restaurateur, and I've got to tell you, when it does happen, it is your chance to buy. We said that with Buffalo Wild Wings. I'm saying the same thing with Popeyes Louisiana Kitchen. Cheryl Bachelder, CEO. Stay with Cramer.